an explanation of more specialized invoice factoring terminology. All-asset debenture. A legal charge that some factors require over all company assets as security for the factoring facility, giving them rights over these assets if your business defaults. CHOC's client handles own collections service. A hybrid arrangement where you initially manage collections yourself, but the factor takes over collection efforts on invoices that remain unpaid after a specified period. Debtor concentration. The percentage of your sales ledger attributed to a single customer. High debtor concentration, over 20 to 30%, may be a concern due to increased risk. Dilution. Reductions to invoice values after they've been factored, including credit notes, returns, or disputed amounts. High dilution rates may result in reduced advance rates or higher fees. Disapproval period. The time frame, typically 7 to 14 days, during which the factor can reject an invoice for funding after initial acceptance, is usually due to disputes or verification issues. Export factoring. Specialized factoring for invoices issued to international customers, often involving additional services such as currency exchange and international collections expertise. Facility review. A periodic assessment, typically quarterly or annually, of your factoring arrangement, potentially resulting in adjustments to your advance rates, fees, or funding limit. Minimum monthly fee. A guaranteed minimum charge is applied regardless of your factoring volume, often based on an expected minimum monthly turnover. Notice period. The required advance notice, typically 1 to 3 months, you must give to terminate your factoring agreement without incurring early termination penalties. Personal guarantee. A commitment from company directors to personally cover factoring obligations if the business fails to do so. Many factors require this for small businesses. Reassignment. The process of transferring an invoice back to your ownership typically occurs when you repurchase an unpaid invoice under recourse factoring. Selective factoring. An arrangement where you choose specific invoices to factor rather than your entire sales ledger, providing flexibility, but typically at higher per-invoice costs. Setup fee. A one-time charge for establishing your factoring facility, covering the factor's due diligence costs, legal documentation, and system integration. Spot factoring. One-off factoring of a single invoice without an ongoing commitment usually carries higher fees than a regular factoring facility. Trust account. A separate bank account where customer payments are deposited before being allocated between you and the factor according to your agreement terms. For more information, visit enablefinance.com today.